have Akshay Bhagwat joining us on the show. He's the Senior Vice President, Derivatives Research at JM Financials joining us. Hi, good to be speaking with you, Akshay. To begin with, what's your market prognosis right now? Have we formed a bottom and we're likely to move, upwards from here on, or it's still too early to call a bottom right now?
Good afternoon. Thanks for the invite on the show. Markets have shown some tendency of recovery from the levels of 24,800 basis spot Nifty. The good part in today's session is that your volatility index has cooled down a bit, 2.5%. So it is in the process of forming a possible bottom. It is just day one today after 5 days of losing around 1,400 points from the days from the life highs, and it's an attempt which the market is making on back of the RBI event, where some short positions in the derivative space are getting covered up. Now, really, whether this bounce back has life or does it kind of fade off is the question. My sense is the first condition for the market is it has to sustain about 25,200 if the market has to stage any kind of a meaningful recovery. So right now it's more choppy. 24,800 is just the base which is valid for intraday or at the most for tomorrow. Small recovery attempts can be possible till 24,150, 24,200, but the real test is at 24,300 how the Nifty reacts. So right now deal with the choppy phase. Any buy positions if you're holding, keep a strict stop loss below 24,750, and any recoveries near 24,200 should be used as an exit in the current market conditions.
And how is the Nifty bank index looking like? We are seeing much more recovery when it comes to the bank index. Also, the valuations are cheap on that side. How are things looking on the technical side?
Yes, so technically, if you look at the price point from where the Bank Nifty did show some good recovery in yesterday's trade itself was the level of 50,350 odd level. So that's an intermediary technical support. The main support point for the Bank Nifty is still lower. It is roughly around 49,500. So it is just from an intermediary support that the Bank Nifty is seeing some shorts being covered ahead of the RBI event, which is underway and which concludes tomorrow. So really, it's up to the RBI. If it surprises us, yes, markets may stage a small bounce back. And in that case, the best case scenario, which I see right now in the current conditions, would be a bounce till 52,000 in the bank index. So yes, it's more of a trading bounce. It's too early to call it a bottom in the market for Bank Nifty as well. The best levels you can foresee in case of a recovery is 51,750 and 52,000. So if you have buy positions, keep a strict stop loss below 49,750 and any recoveries around 52,000 should be used as an exit in Bank Nifty.
One stock specific question on Reliance Industries. Now that stock post this recent fall that we have seen in the market continues to trade below all its key day moving averages. Also today the recovery that we are seeing is quite sluggish when it comes to the Reliance Industries. How was Reliance Industries chart looking like?
The price point from where Reliance is showing some tendency of a bounce back, that's level of 2750, has real strong relevance, because if you look at the historical data of Reliance on the weekly charts, there have been multiple instances right from the year 2022, 2023, where the level of 2750 has held its grounds. So obviously the same repetition is seen today, where 2750 support zone is being fought hard by the bulls. A small recovery is in the making, and if you are a positional trader, it makes good sense to take a buy position in Reliance here, because the risk reward payoff is extremely beneficial from the current levels. So assuming that again from highly oversold zones, Reliance again makes a comeback, the recovery can see a rally till 2,900. So my recommendation is, if you have a buy position, keep a stop loss below 2,700. As a trading bet, it is absolutely a very strong setup considering the risk reward payoff. You can consider buying Reliance for targets of around 2,850. That's your first target. 2,900. That's your second target, with a strict stop loss below 2,700.
2,900 target that you're talking about, does it near to that 200 DMA, which it has slipped for the first time, I guess, in the last 1 year. Well, shifting focus from that, how's the PSU pack looking like currently? Most of them are down at least 10 to 20 odd % from their recent highs. Do you see PSUs bottoming out anytime soon?
Looks very difficult because as of now, in the last couple of months, if you look at the kind of the correlation which the PSU sector had along with the Nifty movement, there was a very strong divergence. PSU did start reacting negatively right from the prior months. That's from September, a strong profit booking round. So most of the PSU names taking steep cuts in the prices, whereas Nifty did held its ground. And today, when the Nifty has actually fallen hard, the PSUs are refusing to see any kind of a strong comeback. So my sense is, even if you see a bounce back, which we are seeing in the last 2-3 days in the PSU names, it's more of a dead cat bounce or a short-term recovery attempt. But really, it still is not very clear whether this is the bottom for the PSU names. So my suggestion is that any small recoveries in PSU should be used as an exit, because still the typical evidence on the charts is not strong enough.
Okay, so use the opportunity to exit when you can. And Akshay, before we let you go, a quick word on the charts of PTM as well as Trent. Both are firing away, and PTM moving on heavy volumes now, 11% higher.
Yeah, absolutely. A very strong recovery by PTM after the mayhem which has been through in the last few months, and the recovery can go all the way up till 900. That's what the technical price charts have to say. So today's recovery almost covers almost 100% of the fall which we've seen in the prior trading session. That's a very good indication on the price charts. Hold PTM, buy PTM. The upside can be around 950 to 1000 in the short to medium term scenario. The other stock was Trent, if I'm not mistaken.
That's right.
Yeah. Well, yes, this stock continues to surprise us. Even in bad markets, this has strongly held its ground. And I believe from overbought zones, again, the value which it brings to a trader is buy on dips, which it continues. And the current momentum can see the stock going all the way till 8250 to 8400. But from the current zone, I would say keep more of a revised stop loss approach, keep small targets, because the stock has stretched too far and too soon, and 8250, 8400 is the small targets you should be working with when your buy positions in Trent Limited.
Thank you, sir, for joining us and for giving us all those details and for putting things into perspective. Moving on.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.